been working at DBS Treasures on the waste management platform. I'm a relationship manager. I've been working there for the last 3 years, managing portfolios of expatriates offshore and onshore. What triggered my interest in fintech is first actually the fact that this is something that is happening quite fastly in the industry, and is changing everything. All industries, I think, are going to be automated, facilitated by fintechs. I am quite eager to learn actually what's happening around me, what's going to change my industry, but also other industries. So it's not only biased by my activities today, but it's just by how fintechs is actually disrupting the whole economy, not only mine. I had been looking, browsing the net, looking for training in fintechs. And that's how I discovered CFTE, just at the beginning. So I started with their first training around fintech in 8 hours. And I really like the concept. The training is very important because it doesn't cover only very basic knowledge. It actually went also in a more deeper understanding of the tech. Believe me, I've been so satisfied with the first actually training with fintech that I decided to follow up with the second one. Because actually the CFTE training, beyond the online training, it actually provides you with a community, knowledge sharing. Because the community we are part of now is actually assembling many persons from different backgrounds, coming from very tech people, but also from people like me in the service industry. So this is very interesting, and this is what I like with CFTE, because beyond the course, you are part of the true community. I put my heart here in CFTE so far.
My name is Alfonso Delgado. I'm originally from Spain, but I've been living in London for some time. My background is in law and finance, although more recently I took an interest in technology. I really wanted to understand how it's impacting the legal and financial sector. So I'm currently doing a PhD at Imperial researching smart contracts. I've always been passionate about technology, and I found it so interesting that what we were being taught in class was changing because of new technologies. Like fintech in general, with the neobanks, and they were doing things with a completely different model to traditional banks, which I found interesting, to the other end of the spectrum, blockchain and smart contracts, and how that was affecting commerce. I realized that we weren't being taught enough about that subject in class, so what I did is I decided to set up a society called the Oxford FinTech and Smart Law Society, just to draw speakers who were really, experts in their field in those diverse areas within fintech, to teach us students about how they viewed, trends and changes to the financial and legal industry. I heard about CFTE when I was still at university. I was doing my master's at the time, and they were looking for beta testers.
Hi everyone, it's Paloma from CFT. I'm in charge of alumni relationships, and today we're live from our London office. Thank you so much for tuning in, and welcome to a new episode of our FinTech Update series. Today, our guest CFT expert is Janos Barberis, who is the founder of Supercharger, Asia's leading FinTech accelerator. And he will be in conversation with our co-founder, Huy Nguyen Trieu, who is also the CEO of the Disruptive Group and an associate fellow at Oxford University's Said Business School. Today's topic, today we will cover several topics, and in particularly we will hear about Janos' experience building the largest fintech accelerator in Asia. We will cover key trends in the fintech ecosystem in Asia, and finally we will hear some practical advice from him about how to start a fintech startup in Asia, in that ecosystem. So just to give you a little bit more of background information about Janos, apart from being the founder of Supercharger, he is the co-editor of the FinTech book, which is the first book about FinTech that is now available in 100 countries. He is also featured in the top 35 FinTech deal makers, global deal makers, by the Institutional Investor magazine, and he sits in the board of our academic board. He's one of the 4 senior lecturers of our FinTech Foundation course. So if you took the FinTech course, this is the best opportunity to ask him anything you want. Also, since this is the first webinar we're doing on the year, I'd like to take this opportunity to wish you a great 2019 from behalf of all of us at CFT. 2018 was a great year for our community. We have 30,000 participants in our FinTech courses, which is very exciting. And we are excited about the year that has just started, and we'll continue to bring you more courses, more events, and more opportunities to connect globally with the FinTech ecosystem. So to make sure you follow up with all our updates on our opportunities this year, I invite all of you to subscribe to our YouTube channel, which link you can find here on the webinar. And before I hand over to Huy and Janos, I will leave you to watch our wrap-up video of 2018 that we dedicate to all of you, our community. So thank you for being part of the journey, and I hope you enjoy the webinar and see you soon.
We're launching with them the first hybrid fintech specialization in the world. So hi everyone, I'm Huy Nguyen Trieu, co-founder of the CFTE Center for Finance, Technology and Entrepreneurship.
Good evening, good afternoon, and good morning. I'm very glad to be here with you today. My name is Huy, I'm co-founder of CFTE, and I'll be in discussion with Janos, who's the founder of Supercharger. So I met with Janos a few years ago when he was still in London, and before he went to Hong Kong to build Supercharger, which has become the largest fintech accelerator in Asia. So today what I would suggest that we'll go through three different parts. The first one, which is really about his story, coming from London, going into Asia, what did he see over the last few years? The second one, we'll talk about fintech in Asia. What's happening about fintech in Asia and how is it different from the rest of the world? And the last part will focus more on starting a fintech startup in Asia. How, as an entrepreneur, do I start a fintech startup in Asia? And what are the keys to success? During all that time, we'll hear Janos, and after that, we'll take some questions. So if you have any questions at all, just make sure you put your comments now, and they're going to be moderated, and at the end, we'll take some of the first questions. But so let's start, Janos, and about your story. Just tell us about your story. What's your background? Why did you go from Europe to Asia, and what was your story of building Supercharger in Asia?
So my background is, first I did regular studies. So I went to university, I started with law, did finance, and it was just about the 2010 financial crisis where I graduated. And so the job opportunities were totally different. It was not what I would expect when I essentially started my studies. It was a totally different market. So I was forced into more joining startups than corporates, because startups were hiring a lot at the time. And I ended up in London. I studied in the UK. And in London, I had the opportunity of working on the business plan of one of the first challenger banks that was called Lintel at the time. And I've done a few startups before, especially when I was at university. And I thought that me being able to do a business plan and being able to build the beginning of a company should make sense to start doing a bank. So I've done that for about a year and a half to 2 years. The idea was to architect the bank on the technology side, find the vendors, look at the regulatory side of it. And then once this project essentially was done, I had the opportunity to go in Asia for personal reasons. And I looked at what was happening in London, and London was very much the ecosystem and the center of the world when it comes for FinTech. But nowhere was Hong Kong to be seen on the map, nowhere was Singapore to be seen on the map. And so the idea was, but what makes London London? And at the time there was 3 simple elements that explained or justified why London was a FinTech hub, which was it's a financial center, it has people which are in finance, and it has money in terms of investment. And then when I looked at Hong Kong, well, Hong Kong was also the 3rd largest financial center, so it had that box. It had people that had the expertise, and it had money because Asia was left untouched with the financial crisis. So the idea was very much, why wouldn't Hong Kong be a FinTech hub, and why wouldn't Asia be a bigger market opportunity? So on the back of this, I got to meet you, we got to discuss, and we said, what can we do in Asia? So we said, okay, well, let's bring the expertise that we built in Europe, because Europe has been through challenger banks, Europe has been through peer-to-peer lending. Let's import that into Asia, and Supercharger was built on the back of that. And then essentially we imported a lot of the know-how and the maturity, but then we adapted it to the local ecosystem, which was very young, if not even immature, to build it up over the next 3 years.
So I remember, when you started Supercharger in Hong Kong, at that time when you said, I want to build Supercharger in Hong Kong, a lot of people said, that's a really interesting idea. We will fund you, but if you do it in London.
Yeah.
And now today, everybody's talking about Asia. So what has happened, over the last few years, in Asia? How come that, so quickly, it has grown over the last few years?
So I think that there's different elements. First of all, Asia has to be broken down as a market, right? You obviously have 26 countries, and China was a beast on its own. India is a market that has developed their own strategy. And so Hong Kong was kind of that middle market where it's not big enough to have scale, but it's important enough to have a brand, which is Hong Kong. And so what happened at the time is Hong Kong is actually a very efficient financial system. It works well, people enjoy it. It's not cutting edge, but it's efficient. And it didn't have the financial crisis that we had in Europe. So there was not really a pressure for people in Hong Kong to go, why do we need to reinvent ourselves? Because the machine was just working fine. But they were realizing that Europe is getting a lot of pain point. And so the idea was, can we do something in London instead? Now, we believe that the market was underserved across Asia. You have opportunities that have never been tapped because it's a growing market, not just because it's an inefficient market. And so what we had to do was to demonstrate a beginning of a value. And so as an accelerator, the first value that we had to demonstrate, unfortunately, was a marketing cultural change value. It's to demonstrate to bank CEOs that an accelerator can position the bank as an external innovation partner, but also internally can motivate staff to work on projects that they would otherwise not do. So this is kind of what was our first role and KPI in year 1.
And so what was Supercharger exactly?
So Supercharger as an accelerator was different. Most accelerators are built on the US model of You take an idea, you build a business, and on demo day, you demo the product, and on the back of that demo, you raise and you go to market. Now, we didn't believe we could do that in finance because banks need maturity, they need scalability and resilience, but also they need result quickly. And so what we've done at Supercharger was we always used to have a cohort of 10 companies with a majority of foreign companies and a minority of local companies. And here the idea was that the local company can be inspired and learn from the foreign companies because of their experience, but the foreign company can learn about the local trends that are about specific market. And so that's what the model of Supercharger was about importing Western companies into Asia and helping Asian companies grow faster on the back of that experience.
So during the last few years, I think you've had your third cohort of Supercharger in Hong Kong.
Yeah.
So what has happened, for all the companies that you saw, through Supercharger?
So what we've seen with all the companies, so we went through 5 cohorts, 3 in Hong Kong, 2 in Malaysia, about 46 companies been through the program. And we selected this from a pool of about 1,200, 1,300 companies. Now, what we see is, first of all, when we selected companies, the selection process goes 2 ways. One is the financial institution that has a problem statement that wants to solve it. And then the other one is what we believe will be big in the market in the future. So we always looked at companies which are not overlapping. So if you look at the 46 companies that Supercharger has, there's only one instance where we have 2 companies exactly doing the same thing. Because I built a bank in the UK before, my idea of Supercharger was how can we select companies to have different components of a bank that we could rebuild. So we actually have core banking, we actually have a credit scoring system, we have a lending system, we have a payment system, we have a clearing system. So those are all the portfolio companies that we have. So that's how we built it. Now what we start seeing is it typically takes the companies about 3 years to dominate a market. So if you look at Neat, which is a challenger bank on the SME banking side, they're starting to dominate the SME space in Asia. If you look at funding societies, which do SME peer-to-peer lending, they're now the largest peer-to-peer lender in Southeast Asia. If you look at WeCash, which does alternative credit scoring, they're the largest alternative credit scoring, but for the Alibabas in China. So typically it takes about 3 years for companies to dominate the market. So the first year is about awareness and getting traction with investor, and then it's about market scale the second year, locally, and then the third year is about expansion.
And so when you moved to Asia, having this experience from Europe, what surprised you?
How non-obvious things were. So the reason why I say that is Hong Kong as an ecosystem is very dense and very switched on because it went through this 3 years before Asia went there. So what an accelerator was had to be explained and educated on, and what FinTech was had to be explained and educated on. And so I think the first 6 months of Supercharger, essentially to get the sponsors, etc., was about educating the market, which is frustrating if you're very clear about why it matters and actually why everyone else is doing it. But we literally had to take people by the hand and break it down step by step. So that's what surprised me. The second one was the maturity of startups was nowhere near what you had in Europe, especially in the context of the quality of a pitch or the business proposition of it. So that also has evolved. And the third one was everyone kept on thinking that FinTech was a B2C game, where in Hong Kong, B2C makes absolutely no sense because it's a 7 million people market. So they kept on looking at European B2C successful model, where it has no capacity of doing anything in Hong Kong. And therefore, people follow the red herring of like the regulatory issues, which is a non-issue for B2B companies. So that's the three things that surprised me.
Okay, that's really interesting. Now let's talk a bit more about Asian FinTech. Mm-hmm. What have been the big trends that you have seen since you moved to Asia 4 years ago?
So I think the biggest trend that if you were to compare Europe and Asia, a lot of the FinTech growth in Europe, at least in the media, was very much about peer-to-peer lending. Why? Because banks stopped lending and people needed money, and therefore you almost don't need to do marketing on a peer-to-peer lender because people go directly to people that gives them money. And so people in Europe and in the US were very proud about peer-to-peer lenders, but Asia was bigger by a factor of like 50. So when you might have had 20 peer-to-peer lender in the UK, you had 5,000 in China. So I think the scale at which the same industry can be replicated was interesting. So lending was very much a parallel that you had. Now, this is pretty much where it stops, because the reason why fintech development in Asia has grown is totally different from what you had in Europe. So let me take, for example, peer-to-peer lending in China. Peer-to-peer lending in China grew not because banks stopped lending. Historically, banks never lent to SMEs in China, but because there was just a regulatory arbitrage of borrowing cheap, lending cheap, and no one was borrowing in the middle for the SMEs. Versus in Europe, banks just stopped what they used to do before. If you look at mobile wallets, it really comes from the fact that in Europe you would have almost an equal penetration of bank branches versus mobile phone, but in Asia you have triple more the amount of mobile phone penetration than bank branches. So if you want to have a mobile proposition or a banking proposition, don't build branches. There's no branches anyway. Just do it on the mobile straight away. And then the third one is unmet demand. So Asia as a market, it's 2.5 billion people, out of which a lot of people never were in the market before, because that's just demographic growth, and they have never been served as a customer. Versus in Europe, very quickly as a fintech company, you're going to start competing on market share, because everyone is already pretty much serviced badly, but they're serviced. In Asia, you have a lot of people which are not serviced altogether. So if I take India, for example, a lot of people don't have traditional identity documents. So they can't be onboarded anyway in the traditional financial system. Yeah. So we had to rethink a lot of those processes.
Okay, really interesting. And for you, what has changed since 2014 in Asia compared to today? And perhaps now I'll take a question. There's a question from Hector, which is really interesting, which is, will European fintech ever be able to stop Asia's dominance in the industry, or is Asia too far ahead in innovation? And coming back to the fact that in 2014, people didn't want to fund companies in Asia. Everybody wanted to fund companies in London. So what has changed and what hasn't in the last few years in Asia?
So I think funding is still pretty much the same though. So if you would go to a VC in Europe and you'd say, I have a great fintech company in Asia, they wouldn't fund it, because they will still go, I want to be within geographical proximity, I don't understand the market. So I think funding wise, unless you're an international VC that has local Asian office, you still won't do that cross-border investment. So this really hasn't changed from my perspective. Now, what has changed is that Asia is a force to be reckoned with, and the dominance of certain players is clear. So what Alibaba has done with Ant Financial, which is a financial arm, is clear, and now people know what that is in Europe, where if you asked someone 4 years ago what Alibaba is at the beginning, they wouldn't even know what that was. Now, does it mean Asia is gonna import now into Europe what they've done? I actually don't think that's the plan of most Asian fintech companies, for two reasons. The first reason is a traditional growth of a startup perspective. Asia is 2.5 billion people, 26 countries. A big fintech company in Asia might be in 3-4 markets. They still have another 20 markets to go. Why bother with Europe or the US, which is crowded and it's far, right? The second one is you have the same product, but you have different reasons for why those products exist. So those are the cultural elements of demand. So a Venmo in the US exists in Asia, so we have a Genie, but it's totally different. Like a Venmo in the US is people in Europe or in the US are shy to ask money, so they rather ask it on the phone and just say, pay me back, because they don't want to do it face to face. In Asia, there's no issue whatsoever to do this. So those cultural elements about a product would take too much time. And then on the data side, and that's typically if you look at Chinese companies, the way they use big data and data collection would not fly in Europe. And therefore, they would have to rebalance all their algorithm, which in a time when you use more and more AI to make decisions, would actually be a big detriment for them to adjust, and will take them more time. So I think Asian companies might more acquire a European company to use their brand and their perception of local brand and their IP, as opposed to try to expand.
There's a question about Alibaba and Tencent and about scale, and the question is about, with that scale and speed of innovation, is it becoming dangerous? And here, the comment was about national credit scoring, using the data that you have, social data, etc. We're having dominant players, which are tech companies in finance. Is it becoming dangerous or not?
So it's a good question, right? I mean, we also need to put a bit like, fintech in the perspective of the bigger market. Yes, Ant Financial is big, and yes, Tencent is big, but compared to the size of the state-owned bank in China, they're still a fraction of that. Now, what we did learn also during the financial crisis is you don't need to be big to put a market down. So when you had the flash crash of the Dow Jones, it was a tiny hedge fund somewhere in the US that was able to bring down a whole market. So size doesn't necessarily mean disruption capacity, and you don't need to be too big to fail anymore to fail a market. You can be small but very connected. So I think that's where the risk is. Now, and that's a regulatory issue. Now, what I'm more concerned about is more the idea that a lot of the big tech companies are realizing that financial services is not as profitable as they thought it was. And they just want to go back to what they are at their core, which is tech companies. So Ant Financial going, I'm just going to white label all my core banking tech to all the other banks in China. And now the issue is not how big is Ant Financial, is how many state-owned banks are using Ant Financial platform and software. And we're not quite there yet. But that's going to be, I think, for me, the biggest issue in terms of risk. Is, are they all dependent on the same infrastructure?
Yeah.
Yeah.
Yeah, that's a really interesting point. It seems like that one of the options for these companies is to become very, very large financial institutions, but one of the other options is to become like the Amazon Web Services and to power the banking infrastructure. And
in China, the reality is they're more likely to do this because they're getting less and less freedom of growing as financial services, because it's as an industry, it has always been very tightly controlled. So they had a nice experiment in certain region of China. That experience is now over. They're realizing it. They can't double their size months on months. So now they're just going to white label their tech. So I think for me that's a risk.
Okay, and now let's talk about launching a fintech startup in Asia. Yeah. So you launched startups in Europe. You've seen hundreds of entrepreneurs in Asia. So what is hard? What is difficult? What is the opportunity to launch a fintech startup in Asia?
So I think simply put, right, and almost very pragmatically, because you have less startup in a Hong Kong or a Singapore comparatively to a London, you will have more room to make noise and people to notice you. So it doesn't necessarily mean that bad ideas get to market, which to some extent they do, but it's less competitive. Now the market will then kick out whatever is not smart as an idea, but competition-wise, it's an easier market to get into, right? So that's one thing.
Which I think you're right. If we're just thinking in terms of fintech startups in London, I think you might have, let's say, 4,000 or 5,000 of them. Was even in a space like Singapore, which is very, very active, you might have 200 or 300 of them.
And it goes to the fact of being a first mover. We should never underestimate the value of being a first mover, because essentially it gives you an easy market for the first 6 months until competition comes in and puts pressure on you. But those 6 months actually can be very valuable. So I think that's one thing which is easy. The second one is one of the things I got to benefit from. So I was, from Europe coming over in Asia. The expat community, which is a word I don't necessarily like as a term, is also very small, and therefore you get to network very quickly. And it's a very open network because everyone has been in that situation. So the barrier to entry to reach out to someone within a Singapore or within a Hong Kong is way smaller than within a London. So access is, knowing people is easier, but access is equally difficult. So I think that's one thing. The third one is, because of first mover and because there's less competition, if you have the beginning of a smarter idea, you might get easier government funding just because there's less things. So to bootstrap you, that's going to be easier. Now, the problem though is one of the benefits of a mature ecosystem, in my view, is the amount of stuff that failed before it. So this is like the history and the memory of pain and difficulties, which we haven't gone through a full cycle of in Asia yet. So getting an ex-co-founder that has built a technology for a previous startup that has failed, we're starting to see now this in Asia, but in London you find them everywhere around the street. Yeah. So I think that would be a good thing. And the third one is, we had a few companies with Supercharger that had incredible vision 3 years ago, but people couldn't buy that vision 3 years ago because it was a bit too advanced. So I think on certain things, you still have people that don't fully understand it. So challenger banks 3 years ago in Hong Kong, people thought that it was something that is impossible. And now if you look at what NEET has done, but also if you look at the recent N26 round or Revolut round, they all have Asia on their roadmap, and now it seems obvious, including for investors.
Yeah.
So yeah.
If you were to look at the portfolio of Supercharger, could you identify like 1 or 2 examples of very, very successful startups and why? Why were they successful in the, in the context of Asia?
So if I look more at the most recent cohort that we had in Malaysia, there's one company that I really like, they're called Curlec, and they do something very simple, which is direct debit. Now, direct debit in Malaysia it does exist, but it's painful. It takes 30 days for you to be onboarded. If you're onboarded, and if you miss a step, it takes 2.5 months. And direct debit is a very important one. Why? Because recurring payment for SMEs and startup management is key. And so they just do this in a very simple way using card details. So it's a very elegant way without touching core banking to create direct debit and without having a central clearing facility. So I really like them.
So if we take this example of direct debit, so could I go to Asia and say, I'm going to take examples of fintechs that have worked really well in Europe or Asia. I'll take Go Cardless, for example, for direct debit. I'll go to Asia and I'll try to do the same. Does it work or not?
So what we've seen a lot in Europe is a lot of fintech startups here in Europe are assuming that a lot of the infrastructure and the open APIs connectivity exists in Asia when they don't. So what's the name of that German company that typically used to be the backend for a lot of the challenger banks? Wirecard. Wirecard didn't exist in Asia 3 years ago. They started going there, and now you start to be able to build again on the back of Wirecard. Yeah. But if 3 years ago you wanted to just bring that over, you would realize, yeah, your idea is right, but I don't have the rails to go underneath it. Yeah. So I think you still have that issue today, including on APIs. API maturity is nowhere near what people in Asia are actually doing, and therefore, if it works really smoothly in Europe, it's going to be incredibly clunky in Asia, which is fine, but you just have to be aware of it.
Okay, very good. And another example, sorry, I cut you.
The other example is some of the startups that work the best with us that we've seen is SME startups. So fintech startups that service the SME market. Just because Asia has a huge underserved SME segment, they have cash, they can make decisions quickly, they're valuable as customer, and this goes across, right? It goes from banking services to lending, to cybersecurity, to payment, to insurance, to well-being. So typically what we see is the startups that focus on that segment on our side, and we have about one third of our companies do this. They do very well because of this. It's an underserved market that has money and that has a pain for the last 20 years. Retail have been pretty well serviced, not necessarily in terms of quality, but at least in terms of proposition scope. Okay,
let me take a question from Ashley in London. You might have seen many fintech companies doing the same mistakes again and again. What are some of those common mistakes?
So I think, if I take even Supercharger as a company, right, that did mistakes, and if you look at some of our Asian companies, there's that thing about, if you look at American startups, that they go like, oh, I'm going to be in 50 markets tomorrow, and there's still a level of shyness that you have in Asia about this. Unless you're China, and then, but China is like, it's not about 50 markets, I'm going to be in the 50 provinces. But you still, I think that bullishness of this, scale it more rapidly and believe you can do this. Now, you can believe whatever you want as a founder, but if you don't have a VC that backs you, eventually it's not going to grow, right? So I think that bullishness is something that I've seen as a mistake, because it also goes to the first point. You're going to be in Asia, well, you used to be at least 3 years ago, first mover on a lot of points. And if you don't execute on this straight away, people are going to come behind you and then close that market. So either you grow quickly, and it's a risky thing, but I think that's one of the mistakes that I've seen people doing. The second one is it goes to the first thing, but if you do the bank sales cycle, we had one company that has been incredibly great at doing this, which was the team at Bamboo. Is as first as they closed one of the first clients they had on the banking side was Standard Chartered. All the banks they were talking to, they said, now we work with Standard Chartered, you want to work with us. And it's just, pride yourself of having that blue chip client and go for it, and do it just straight after. The third one is underestimating the sales cycle time, and the amount of conversation you need in order to close it.
Which I guess would be very similar to Europe or the US.
So it's actually a bit shorter, because we can have access to a CEO in 2 days, where in London it would take us 6 months or 6 weeks or whatever. So our startups did enjoy that. But I think it's the amount of repeat meeting that you need to do is an issue. Because banks are trying to educate themselves as much as they're trying to partner with you. And if you had to make a guess, they're more likely trying to educate themselves than trying to do a partnership with you. And I think startups don't necessarily understand that.
If you have any other questions, send them now, because I'll just take the last few questions. There's a question from Emmanuel in Paris, and who said, you mentioned Hong Kong as a place that has all the features to succeed in fintech, because they're a bit like London. Are there other regions you would see which are as promising?
So you have three different markets, right? I still think Japan is a great market, mainly because for me it remains the last established financial center without strong innovation, and so it will get there, right? It's a market that pays, it's a big market, there's an opportunity, but it's just incredibly conservative and closed. So if you're able to crack that, I think that would be great in Asia. I think there's an Indonesia, which is a very natural second, after China strategy. But Indonesia is very opaque, so you don't know where to start. And like companies like Grab want to do multi-million-dollar VC fund, but they don't know how to deploy their capital. So here you would need to build an ecosystem to bring a little bit of transparency in that market. And then the third one I would say is Vietnam is also the Vietnam, the Malaysia, well actually more of a Vietnam is interesting because it's not necessarily as big as in Indonesia in terms of size. But I think you can try more on the technology side with the Grab payments or etc. So those would be, because there's not so much opacity in Vietnam compared to in Indonesia, but here it's more about integration of startups into a bank or a tech company, which is missing as a piece.
And outside of Asia?
Canada. I think that the Canadian market is, because the US is already well covered, right? So it's going to be hard to crack it. Canada is a nice middle ground where you can test culture, technology, and investors, see if it works. The talent is there, the startups are there, the banks are briefing, and once you've done well in Canada, then you're not that far away to do something. So for me, Canada would be, and also you have the university partnership, which is also very strong. So that would be this, and then Latin America, I have no idea, and Africa, I have no idea as well. So.
We have a question from James in the US, which about your biggest concerns. What are your biggest concerns for the development of fintech in Asia or otherwise?
So I think there's different concerns on different segments, right? So the biggest concern I had on financial institution is the amount of continuous education that we had to do to every single time explain what a startup is and how they could benefit in terms of the business side on the bank. And that's mainly to do with staff education and turnover of staff. So there is no memory that is kept within financial institution, especially on the innovation side. It just turns too quickly. And for startups to do a meaningful partnership, we need to fix that. Because otherwise we have to reinvent the wheel every time and it just doesn't make sense. So that's on the banking side. So that's really education. On the startup side, my concern now is I haven't really seen recently a proposition that is a new proposition. So I've seen new flavors of chatbots, I've seen new flavors of challenger banks, but now it feels that that fintech startup proposition is more marketing segmentation than core technology differentiation. And that kind of worries me because, down the line it's going to be VC's money problem and then founders' time problem. But I haven't really seen a new niche that has been built.
So you're saying less innovation?
Yeah. And now it's really hyper-segmentation and using marketing to explain why you can hyper-segment. Cost-wise, you can do this because technology is lower enough to now create niche markets and make it economical. But to me, this is the issue as how big, therefore, can a business get, right? And so unless you rebundle those segmentation, I don't see how big they get.
Okay. On the other hand, we could say that over the last few years, we've had like a big innovation, which was cryptocurrencies and digital currencies, blockchain, and this kind of thing. So you do have, some of them now in terms of their implementation. How long is it gonna take? That's.
But those was a few years ago. But like if you look now,
Yeah.
even on the cryptocurrency space, etc.,
Yeah.
it's more of a flavor of something than something new.
Yeah, that's very true. We have a question from Winston in Singapore, which is a very broad question, which is there a direction you really hope or want the industry to steer towards?
So it is very broad. So thanks, Wilson. I don't know. Again, I always look at the fintech market from the startup side and then the financial institution side, right? If you look at the firepower of a financial institution and their staff size, if they were to get it right, they could do incredible things, but we just need to make sure that we reach those people, right? And that would be great because if anything, it would create more meaningful jobs for people that not necessarily think they're meaningful today, when it's not necessarily true. I think most people, if they could have the right environment around them within a corporate, they would love to thrive in that, right? Very few people want to actually build their own company. So if we could solve that, we could even transform financial services using financial services as we currently know of it, right? So I think that's a big one that hasn't been really touched. And I don't necessarily think that transformation has to come necessarily externally. But you just need to find sponsors and people that believe in that. I think on the startup side, I think there's going to be a new trend, which is because you have more and more fintech startups pressuring each other, they now need to build their second version of their product. So not their technology, but their offering. And if you look at sustainable finance and that whole trend, this is growing way more rapidly than the fintech ecosystem, but they don't necessarily have the innovation of distribution. So if you're a robo-advisor and you could do a portfolio that has sustainable finance elements or assets, that would allow you to differentiate type of market which is growing, and I think you're going to see this. So I think more meaningfulness into the product as opposed to just efficiency and cost cutting would be a nice touch. Now, financial services. You want cheaper and have a better return somewhere, so let's see where that goes.
And take a last question. Challenger banks.
Yeah.
So a question from Haida in Manchester, which is we might look at the rise of challenger banks coming from the from the erosion of trust in banking in general. Do you agree?
I don't know. I was with a bank in the UK when I was a student, so I'm not going to name it. I'm still with them, and like I said, I almost feel bad for them that I still have an account for them because I must cost them more money than the other way around. No, I think the trust is an issue, but I think it's people were not exactly when you had the financial crisis. You had Amazon rising, you had Apple rising, and we were doing things totally differently. And banks were not doing it. So I think it's almost about aware or conductive in our life than trust. Because we have, we might know that the economy has been impacted, but did my banker cheat me personally? No, I also never had a banker. But what I'm getting at is, I don't necessarily think it's so much of a trust issue that it's a convenience issue.
Yeah.
So do I not trust a bank to serve me well? Yes. Do I not trust a bank because they're going to cheat me? No, because if anything, the financial crisis make bank today more trustworthy than they ever were, right? I'm less likely to be scammed today by a bank than I was before. So I think trust, no, the regulators have done a good job. But the trust in can they service my need? Yes, I think that's an issue.
Okay. And two questions from me. One, Now, could you name 3 companies you find really interesting which are not part of Supercharger?
So I love that because I knew Huy would ask me that question, and obviously I didn't prepare it, so it's my fault now. So there's one company that I really liked. They call Comply Advantage. They're on the AML side. They use artificial intelligence. It's mainly because I think the story of the founder, the fact that he built quite a few companies, but not necessarily just in finance. He started with a student platform, then an invoice factoring, and now he's on AML. Just shows you how the thematic of you have to be in finance to build a fintech company works. No, it's actually a very good company that I really believe in. So Comply Advantage, they're a London-based company. I really like them. The other one I would say is in Canada. I can't remember their name, but I'll try to put it in the comments after just to give them credit. I said that there's a lot of people doing chatbots, but those guys essentially realize that the reason why chatbot will fail is because expectation of reply of a chatbot is instant. But currently the AI cannot really handle it, and then you get escalated to a human, and then your experience is not good. Because you go, well, I wanted the answer now, not in 5 minutes, and therefore thing. So they realize that chatbot should not handle customer, chatbot should handle sales. And that's the only thing that they do, and they do it incredibly well, and they got 3 million of turnover in a year on the back of that. So they almost go to banks like, you will do a chatbot strategy, it will fail, let me tell you why it will fail. Look at this first. So that's interesting.
So now I'm very intrigued, and we don't even have the name of the
No, I know. So I know the accelerator, which is helping them. It's the Holt Accelerator in Canada. And like I said, I need to find their name. This is a really, really good company. And there's one company that I really liked 3 years ago that we couldn't bring in Asia at the time. But they were doing infrastructure finance for infrastructures, right? They came out of Argentina, and they were essentially looking at crowdfunding, where you would have a piece of public financing, 20, 30, 40%, and then the rest would be the public to build infrastructure, so highway, roads, ports, etc. Because they saw a gap that if you want to build infrastructure which is more than 200 million plus, you can go to the IMF, they'll finance you. If you want 50 million less, you can go to a local town and they will finance you. If you're between 50 to 200, there's a bit of a gap there, and they were essentially addressing that financing gap. And that company, I remember their name, they were called Capital with 3 A's, so CAAA, Pitl, PITL. So this was a company I also liked because they were different and they were very clear on their niche.
And we know that in Asia there's a lot of money because we've all watched Crazy Rich Asians.
Yes.
So if there was a billionaire who gave you, let's say, $10 million, what would you do? Which is not Supercharger, of course.
So every time he increases that amount, so that question was asked to me a year ago, and it was like if someone gives you $1 million, and then 3 months ago it was if someone gives you $1 billion.
That's called scalability.
So it's great. So it just makes my problem bigger by a factor of 10 each time. So a year ago I was saying let's build a data bank where people could monetize their data. And I think I was right because no one could say that it was wrong, but I think I was wrong in the sense that how do you actually monetize it, and legally how do you structure it? And right now there is no economic framework to allow people to monetize their data. So it's like you don't shoot an ambulance and everyone wants to make more money on their data, but the reality is not going to happen, in the short run because there's no market and no legal structure around that market. So if you were to use 10 million to do something, I don't know. I wouldn't do a challenger banks. I think that there's enough challenger banks, and I think that because they're rebundling service providers, it doesn't necessarily make sense. I would be looking for a solution that serves SMEs. I don't know what on the SME side. It could be something as stupid as like taxation management or HR payroll. I don't know. But I think that the SME market is the market which is growing. And I'd be doing this, but I don't know what the product would be. No. Yeah.
Thanks a lot, Janos.
Okay.
There was a very enjoyable discussion. Thanks a lot to all of you. I hope you liked it. Make sure that you register to all the next events. If you're not part of it, make sure you register to our YouTube channel, and see you very soon. Thanks a lot. Bye.
Good.